Good morning, this is Mayor Valensky in the morning session of Driving Markets. Okay, so yesterday the US markets came off, the Dow closed down over 300 points, also this S&P came off the high, the Nasdaq came off, etc, etc. The reason being is the main drive was the ADP private sector labor report, which came in at 330,000 new created jobs, where they're expecting around about 653,000 jobs, and that immediately started a negative sentiment. Then General Motors just came in with very disappointing second quarter, and they dropped 8.9%. So you take those few factors together, that already sent the market down, and then you've got rising numbers of COVID-19. However, the fact regarding COVID-19 is that what people are afraid of is that the lockdowns and people will stay at home, and therefore not go and spending money, which is bad for the economy, and that also damaged sentiment. However, considering that indices are at all-time high, it looks like people aren't really paying attention to COVID and still spending. The other factor is that it looks like the markets have peaked, so earnings have peaked, indices have peaked, economic cycle has peaked, etc, etc. So you've got a situation whereby investors are very, very cautious. What does it look like short term? Short term, you're probably going to have a bit pressure on the downside across markets, indices, shares. So you might be looking to go short over the next week or 2 weeks. Longer term, we do expect shares to rise. You've got Richard Clary mentioned, the vice chair of the Fed, said that interest rates are likely to rise in 2023, so that calmed markets down a little bit. However, there is massive underlying pressure on inflation. Remember, as inflation rises, there'll be more pressure on the Fed and the central banks to raise interest rates, which is the main vehicle, the main weapon they use to fight inflation is interest rates. If interest rates go up, which they will do eventually, that will take money out of the economy because the regular individual has to pay more for their mortgage and their food and their costs and their clothing and their shoes, etc, etc, which means less money to invest overall. However, that seems to be around about the 2023 year level. So in the year 2023, they're looking like they're going to raise interest rates, so people are sort of disregarding that and just having a party. My personal opinion is that markets are very, very toppy, and the slightest negative news at the moment is sending them down. So just be cautious there. Also, someone mentioned to me yesterday that they don't seem to be making any progress in the trading. Really trade very small amounts, take small profits. Overall, that should be the guidance. Don't overexpose yourself in these markets. As regards foreign currency, FX, you're probably going to have a slight bit of pressure on the dollar, so you maybe be selling the dollar. Regarding cryptos, yesterday Bitcoin touched the $40,000 mark. I'm not sure where it is this morning, I haven't checked, but it's hovering around there. So whoever's involved in cryptos, which to me has no basis, but long term it looks like everyone's getting involved in cryptos and everyone's buying Bitcoin. So that's your decision. Everything I say here is an opinion. It's got no harsh validity and guidance. I'm not advising you to trade. I'm not advising you to get involved. I'm just giving a personal opinion, so you won't come later on and sue me. So there's my statement of caution. Have a good day, success in your trading. If you need to get hold of me, you can contact me on LinkedIn. That's the best way to contact me on LinkedIn, and I'd be happy to help. Have a good day and great success in your trading. All the best.